this is FX MVP Jose Tormos broadcasting to you live here on the Analyst On Demand channel. And I wanted to go ahead and do a short video here on the pound US dollar, confirming my entry to go long on the GBP USD. This is pretty much a nice little short-term trade, as short-term as the 240-minute time frame can get, which is a 4-hour chart, to go after the D extension here on the 240 time frame. Now, the GBP USD has been in a sideways range of consolidation for just about 2.5 months now. So, as you can see, if I compress my charts here, it's been in a range of resistance, support, resistance, support, resistance, support, resistance, support. Now we're at resistance, so we would think to ourselves, hey, we're going back down to support. Well, we haven't broken our uptrend line yet, and the market here is in the buy zone of our automated trend line, and our up A, B, C wave movement has come to a 618 retracement and has been making higher highs and higher lows since. And today, this morning here, with a counter trend line break, our down A, B boundaries that we had from the resistance going down to support wave movements have been reversed with the positive pound dollar fundamental news this morning here. And as you can see, the last 4 hours here has been bullish, and it has broken not only my inner counter trend line but my outer counter trend line. So what I've done is I've gone ahead and placed a long trade to buy as soon as this candlestick formation closed. Just a few, like 4 minutes ago it closed. I placed my buy position. My stop loss is going to be risking the same amount that I'm going after, since we're going after a counter trend line break on a 240-minute chart. Excuse me. So the D extension here for the swing, which my swing is 154.89A to 156.56B. 618C pullback was a Morningstar original entry. Higher highs, higher lows since then. Here's my most recent counter trendline break to the north. My stochastic RSI field gauge is still pointing bullish. We're in the buy zone. D extension is set for 57.58. So again, that's about approximately, well, let's not be approximate. Let's actually do the math here with our calculator and see. From 157.58, which is the limit, to our entry price of 156.92, it is a 66 pip reward versus a 66 pip risk. So we're going after 66 pips in profit, also risking 66 pips in equity management, therefore going 1-to-1. So what are the convergences of this trade, which are, hey MVP, what are the reasons you're taking this trade? So that way, in case it doesn't work out, we know what we did right and what we did wrong. Well, the reasons I took this trade, number one, is there's a counter trendline break. So that would be convergence number one. I'm going to mark them down here. Convergence number two would be an engulfing bullish candle that engulfed the previous 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles past. So the past 10 candles here on the 240-minute chart, okay, has been engulfed. And keep in mind, this is a 4-hour chart. So you have 4, 8, 12, 16, 20, 24, 4, 8, 12, 16, 20. Almost 2 days of sideways movement have been engulfed by this candle. So the engulfing candle is the second convergence after the counter trendline breaks. We are in the buy zone of the automated trendline system here. So there's 3 different reasons why I would take the trade. Number 4, we have the field gauge is still pointing bullish, which is the stochastic RSI, still wave counting to the north perhaps. And convergence number 5 would be here, that if I draw a horizontal line right below the body of the formation, and even the wick of the formation as well, across the low of the wick, if I go across here, I see that there's a high of resistance here that is becoming a floor support. And if I draw a horizontal line across the low of the body of the candle, I see that this high of resistance is becoming a floor of support. So essentially we have 5 different reasons why to take this trade to the north. And the only reason why it would not work out is if the large resistance we've seen over the past 2.5 months holds strong, not allowing us to break through here and strike that D extension to complete that swing. But keep in mind also that throughout the past 2.5 months, we have struck this price range of 57.58 right here and right here. So we've already broken through this boundary twice and then come back down. Can we do it a third time? Only time will tell. This is the GBP USD short video on our entry to buy the market at 156.92, placing our stop loss at 56.26 and our limit at 57.58, going for 66 pips in reward, risking 66 pips on the trade. This is FX MVP. Enjoy the rest of your day. We'll come back and take a look at this trade opportunity when it completes and update you further at that time. Thanks, everyone. Enjoy the rest of your day. This is FX MVP. And once again, good morning, everybody. This is FX MVP, Jose Tormos, broadcasting to you live just north of Orlando in beautiful Lake Mary, Florida. Bringing to you the conclusion video to the pound, the GBP US dollar 240-minute time frame trade opportunity that we had placed here on August, a little bit before August 16th, 2012 here. What we have done here, everybody, is we have gone ahead and placed a trade, as you can see on your screen, based off of the counter trendline break that occurred on the GBP USD to fulfill an up A, B, C to D wave movement. Now, we had one reason why this trade would not have worked out for us, and that was the fact that we have been reaching a sideways range of consolidation, large consolidation, topping out at resistance, bottoming out at support for quite a few weeks here. But with the amount of convergences we've seen going on in the markets lately, and with the power of the Fibonacci's, we went ahead and placed this trade because we had an overwhelming amount of convergences, which means opportunities and educated reasons why to take the trade in that direction, and it has worked out for us. So here is the conclusion video to the GBP USD 240. We entered the market at 156.92, placed our limit order at the D extension of 157.58, stop loss at the as a 1-to-1 risk versus reward at 156.26. So it was a risk of about 65 to 66 pips versus a risk of 65 to 66 pips versus a reward of 65 to 66 pips. This was the before screenshot here that you're seeing. As I go ahead and close it out, here's the after results of the live market. Here you can see that he had the counter trendline break on the 240 is where we entered the market. If I can press the charts, you see the AB boundary that I had here, which was 154.89A to 156.54B. But a Morningstar entry point originally at the 618, and the market has begun making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, off of an uptrend line along the way. So once again, I said we had one major reason why the trade would not work out, which was the fact that we had large resistance here in our hands, and the market could fall back down to large support. But we had a counter trendline break, which was, let's count the convergences, one reason to take a trade, which was the counter trendline break. Convergence number 2, the engulfing bullish candle formation. Convergence number 3, past resistance here, became a floor support. That's 3 or more reasons why to take a trade. That's what I like to see, is at least 3 minimum reasons why to take a trade. Convergence number 4, we're in the buy zone. That gives us a 60% chance as to why to take the opportunity in the first place. It gives us a 60% push, so to speak. And convergence number 5 here would be the fact that the market has an up A, B, C wave movement that had an entry point at the 50618. So I like the Fibonacci retracement aspect of that. And then convergence number 7 would have been a fuel gauge U-turn, which we did not really have. The market had already begun to give us a fuel gauge movement, which is the stochastic RSI. So we had 5 different reasons why to take this trading opportunity. And as you can see, let's go ahead and take a look at the results of that movement. As you can see, we entered the trade here on the 16th of August at 6 a.m. after this candle closed. It opened at 2 a.m. here, closed at 6 a.m. It's a 4 a.m. hour candle. And as you can see, the market rallied 50 pips, then retraced and moved sideways as the market normally does. It rallies, retraces, and then it extends here and finally fulfilled the D extension at 57.56. And as you can see from the entry point, the market went up to the 1.618 for a rally of about 65 to 66 pips there in reward. So that has been the GBP USD 240-minute time frame trading opportunity. Congratulations to those of you who are continuing to succeed in the market and lock in profits along the way. This has been the closing video to the GBP USD 240 chart. This is FX MVP. Continue to join me on the Man vs. Pip show each morning starting at 3 a.m. weekdays, where we look to take advantage of the charts before the charts take advantage of you. Thanks, everyone. Have a wonderful day. This is FX MVP.